Alright, what's going on, guys? This is the trade breakdown for the short setup that I took on Wednesday. Let's get right into it. So yesterday, you guys can see that we had pretty nice expansion to the upside. What I was really looking at was this equilibrium of the last range from this high to low. And so uh, normally you will have parabolic runs that occur underneath the equilibrium of a dealing range. So we were still under that. You can see this is that huge 10 a.m. candle on the 4-hour that printed from yesterday. We came back down into this 4-hour breaker and then continued to go higher, making a new high day. But I didn't like how we failed to take out this area of liquidity. Even though it's a no news week, right, that could have maybe had something to do with it. But this is the first area of liquidity that is in a premium and and above the equilibrium of the range. Now, if you flip to ES actually took out this area of liquidity. Let me take out some of this stuff. So ES actually took this area, repriced to the equilibrium of the range, and then we completely rejected. And so this is what an actual higher time frame turtle soup looks like. We have a key pool of liquidity, equilibrium of the range, and then now we have a 4-hour open high low close candle, and that actually occurred, as you can see, above midnight, right? And then we get our other fake move at 8 a.m. as well. So now looking at NQ, we can play this hourly candle. So this is what we actually were able to get inside of. So going back to the 4-hour, I wasn't expecting this 4-hour breaker to hold price. And since yesterday we already expanded with a no news week and today is the day before Nvidia earnings, I was expecting today to have a retracement and rebalance some of this area. So now this could be your new dealing range, right? And you can expect price. I really wasn't expecting price to come all the way down to the equilibrium. I really wanted to see this 4-hour gap hold, but we were still able to frame a very profitable trade within that context anyhow, and we'll get into how I took my profit. But so since this 4-hour order or 4-hour breaker was already used from here and failed to take out this area, I wasn't expecting this wick or the opening price to really be that sensitive. Now my eyes were on the order block since this was never used yesterday on the 4-hour, and so my initial draw was the low of the high of the 4-hour bullish for value gap, and then the order block. So that was my draw on liquidity, and of course I was looking at the equilibrium as well. So now going into the lower time frame and looking at this as well, right? We have the hourly time frame. We have SMT at a key level, weakness on NQ. We know that ES has been the stronger asset on the higher time frame this entire time. We get a proper turtle soup. We have an open high low close candle. We have an hourly change in the state of delivery right here. Key time as well, 3 a.m. We continue. What do? We break this low as well. So that in my eyes is my market structure shift. Now I want to see if this up close candle, the highest up close candle, which was our change in the state of delivery, acts as resistance or not. And so an ideal order block, you don't want to see the high of it get breached or the or the closing price in this case, and you can see we never did. So that was also another good sign to me. Even though we closed above the CE on the hourly, you can see the next candle just sent us lower. So now zooming in lower, I saw that we were starting to dump from this area, and we closed below here once again, the highest two up close candles, creating another market structure shift. And we failed. You see how price failed to rally above midnight here at 8:45. And if you zoom in there, let's zoom in some more. There's probably a lower time frame fair value gap. That's what price was probably entering inside of. Yeah. So on the 1 minute, you can see that price does IOFED, right? Institutional order flow entry drill there above midnight. But if you zoom out to the 5 minute, price never gets above that midnight price, right? Or the 15, excuse me. Never gets above that midnight opening price. And once I saw this continuation of the dump, that's when I knew I needed to get in because price was most likely going to be heavy. So I wanted to see what 930 would do because I wanted manipulation from 930. I wanted that 930 Judah swing. So once again, now we have a more important market structure shift. This is where price or these down close, and also before getting into this, you can see that price never closes above here. This would be your latest order block on the 15-minute. You want to be trading with 15-minute and hourly order flow. So never get the change in the state of delivery here. Failure to, or we're respecting everything that I've already laid out on the hourly time frame, and this 15-minute fails to rally above midnight. With already having that higher time frame draw and understanding that today should rebalance lower. So getting into the even lower time frame, let's go to the 1 minute because that's what I took my entry on. I wanted to see the 930 have a small Judah swing, and so leading up to 930 we have 927 pump, and this is the dealing range that I was using from this high to this low, because ideally I didn't really see this get breached, but I was going to stay patient just because this could have been a turtle soup. You can see on the 15-minute this was a 15-minute gap, so I wanted to see if that would be left open or not. So this IOFED, I wanted to stay protected, and so I waited to see what would happen right at 9:30. Here's 9:30. We're respecting equilibrium. If I put on OTE, you guys can see we're smacking that 0.62. And so, and look at the candle body, right? The first, or the candle body CE is respecting that gap really nicely. And then what do we get? We get our another 1 minute change of state of delivery with everything that I've already outlined. And if you look at ES, we also had SMT here. So ES is the stronger pair. We can anticipate price to go higher. And so this is actually good because we have more people buying the breakout, right? As a retail trader, we have a change in state of delivery. And now see, all I'm waiting for is a retest of these up close candles. And if we go into Top Step X, you guys can see this is my exact entry. I was playing the 15-second turtle soup off of this order block here. So this is the first 15-second high, and I literally bought 2 ticks above. So you can see I got filled at 44.50, 10 micro contracts, turtle soup into the FVG. That's that same, this is the same 1 minute order block. And you guys can see if we highlight this highest up close candle, that this acts as a really nice area of resistance. So failing to reach the CE, once I saw the closure below here, this low, I knew that I was on sides, and the first draw on liquidity that I was targeting was just that 4-hour fair value gap that we were looking for earlier. So let's make this blue, zoom back in. And so once we got this close, my stop was break even, and TP1 hit. I took 8 of my 10 micros off here from my entry. So let's see, 44.50 to the low was 35 handles. So completely nice trade. I was risking this high, so it was 20 point or like 19 points of risk from my entry. Really wasn't worried about the RR there. I was just taking profit at a logical level. Higher time frame order flow is bullish. Like I said originally, I wasn't expecting this top half of the breaker to hold, but I wasn't anticipating. I didn't really want to be holding a full position until the order block, just in case it could have wicked and then stopped me out of break even, right? Framing a profitable trade, taking partials at logical level. So I was 8 contracts off there. Other 2 were break even, and so now this is where I just started. This is now where just trade management takes place, right? All I did then was take profit at the order block high, because that was an area of resistance that I was expecting price to maybe react from. TP filled right there, and then we continue to dump. Once I saw this displacement, all I did then was look for another logical area to take something off. I should have held for EQ, but once again, I really wasn't bearish. So all I did was use the standard deviation projections. I was targeting the -2 standard deviation, but I was trailing my stop. So this is, we can delete this. This is the -2 standard deviation right here. And so all I did was I was targeting a few points before that. So I was targeting 35 just in case it didn't want to get all the way down there. Sometimes it does that. I'm not trying to be exactly perfect, but I did trail my stop. I wasn't trying to be in this trade for as long as or as long as possible. Arguably, I could have managed this a little bit better, but I did just have 1 contract left at this point. I really wanted to see price just hold from this first FVG. Sometimes it can dig into the second one, which this ended up doing. But I moved my stop loss to the 50% of this wick here, because in my eyes, these are 2 fair value gaps. And so ideally, the best stop should have been here, because 3 PD arrays getting violated means you're offsides, or you're going to sit through a deeper retracement. The whole point of me trailing my stop aggressively was not wanting to sit through a deep retracement just because I had one contract left, right? And I'm always trying to protect gains, right? I already framed a profitable trade. Now it's all about just trade management. So from entry to last runner, I got stopped out for almost 80 points. It was like 300 ticks exactly. You could see I got stopped out here. Price did what it wanted to do. It institutional order flow entry drilled once again from this, and then eventually went lower. Sat through a little bit of chop, but nothing too crazy whatsoever. And then we ended up continuing to dump until that equilibrium. But this is why I didn't want to hold my trade the entire day, right? I wasn't expecting price. Yes, it moved a lot lower to the weekly open. Also could have been a drawn liquidity. Also, if you're holding a trade and you know you're on sides with order flow, the low really isn't going to be put in until at least 10 a.m. And you can see I did get stopped out at 9:47, but just something that I can work on in the future. But regardless, this is why I didn't want to hold my trade, because this could have happened right earlier, just because we are in those higher time frame PD arrays. Arguably, once again, should have held just for the equilibrium of the range, but this is exactly why right here, why I didn't want to hold through this, because I wasn't completely bearish on the day, right? We still are in a bull market, and I'm not totally convinced that we're going to go much lower. But very happy with this trade. Majority of my contracts were taken off at that 4-hour bullish for value gap high. Nothing wrong with that. Low hanging fruit is very great. It's a very, very profitable trade that I took with 10 micro contracts. I hope this helped you guys. This is a straight walkthrough of what exactly that I was looking for in my trade, and really just the trading with hourly order flow and hourly order blocks has helped me a lot. I got put on by Snipa. He's one of he's just a great guy on Twitter that I've been friends with. But this high, the SMT at the high, failing to reach equilibrium, and then the hourly change in the state of delivery really told the story. But that's all for this video. I hope you guys enjoyed, and I'll see you in the next one.